Welcome to another episode of Business by the Numbers. I'm your host, Hunt Demarest, CPA with Parmelis and Associates. With the holiday season in full swing, or by the time you listen to this wrapping up, what better time to talk about making sure that you keep the proper reserves, don't spend too much cash, take too much cash out of your business, and everything else in between. So some common mistakes kind of coupled with some common tips on maintaining reserves and not squandering away your cash and putting yourself into a cash crunch. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you have a question that you want to hear answered on an episode, if you have a question for me or anything else in between, shoot me an email at podcast@parmelis.com. The whole idea of this episode is cash, keeping reserves. Now, let's be clear about this. When I'm talking about cash on here, I'm not actually talking about cash, right? This is, if you want to talk about cash and the whole thing in between of physical green cash, that's a whole separate topic. But when I talk about cash, I mean money in the bank, meaning money that I can touch immediately. Not something that's tied up, not something that's, an investment that I can't get for 6, 8, 10 months on this. No, truly cash in a bank account, savings, checking, etc. When we're talking about this, we're talking about cash and what people make mistakes to get their reserves too low, to put themselves into a cash crunch position. So we've already kind of got over the idea of cash is not actually cash, right? That could be credit card deposit, electronic funds in your bank account. Now, what is a good number for reserves? And this is something that, I'll be upfront on, and until we talk about this a little bit later, that will confuse you a bit of there is generally no such thing as too much reserves. It is a champagne problem. I don't want you to have $3 million in your business, but if you do, you're probably not going to be mad because of cash flow reasons. That being said, how much money should I have in my bank account? General rule of thumb here is 3 to 6 months of operating expenses, right? How much does it cost to keep your lights on? If you were to have no sales, could you operate for 3 months and still survive? So 3 to 6 months of operating expenses on it. Do you not know what your operating expense is? Hunt, I don't know if it's 20 grand. I don't know if it's 30 grand. What the heck is this, right? Give me another kind of just rule of thumb. Well, generally, people's operating expenses are around a third of their monthly sales, or they should be. So if you want to look at it this way, if you want to kind of get a good target for your reserves, 1 to 2 months of your monthly sales. Works out to be a really similar number either way on this, but those are going to get you in a pretty good spot. Now, let's kind of keep in mind of what could make me skew that number depending on who I'm talking to, right? Let's say you have a super consistent business and you look at the trailing 12 months of your financials and you don't have a month where you lost money. You made profit every single month. If you're good with your money, if you don't strip a bunch of money out of that business and you don't have a ton of debt on it, if I had to guess, your bank account kept on going like this and this and this, right? So if you have a really consistent business that has a really strong record of profitability, you could operate your business with maybe, 1 week of operating expenses because the bank account never goes down. It keeps on going up. If you have that business, congrats, right? You have a cash cow. You have a very, very steady business. The general rule of thumb is most shops are not like that at all. And this is the one thing that still to this day, after doing this almost 20 years, still surprises me is even my top shops have months out of the year, probably 2 or 3, where they lost money, which is very strange for a lot of, kind of later stage businesses. The reason that your business can be a bit cash flow tight, even though if you look at the year to date, you might have made 200 grand, is your business goes like this. Think about when you pay your sales tax once a month. Think about when you pay your payroll 2 to 4 times a month. Think about, some of your rent expenses. That's 1 time a month. And then you have payments kind of spread throughout the month, work throughout the month. Now, God forbid that you're doing fleet work, you're doing restoration work, because then it pushes the payment even a couple months farther out from these jobs. If you're looking at this, do not confuse profit and cash, right? I am not talking about profit issues. I'm talking about cash flow issues. So if you're looking at this and saying, well, Hunt, I made a profit. Why am I ever dipping down in cash? Profit looks like this, right? It's assuming a straight line that you made, $500 a day for 20 days and, that got you $10,000. Realistically, probably what it was is you made $2,000, you lost $500. You made $3,000, you lost $1,500. This is what your cash flow is doing, and this is what your business. Now, smoothing out on the month, smoothing out on the year, you don't see those peaks and valleys. And if you have high enough reserves, those peaks and valleys never get you into a situation where you're running out of money. This is I wanted to kind of translate, obviously, the basic idea of why we need reserves and how much you should have, but also, a lot of times just make you feel a little bit better of, hey, doesn't mean that you have a bad business if you have cash flow issues. Maybe you just don't have that baseline reserves enough, and just a month-to-month, day-to-day swings is too violent for the amount of reserves that you have. If you got a really violent business, you might need to have 6 months, and that still might be a little bit tricky if someone strings you out a bit, right? Compared to the other side of this, if you're super consistent, you never run out of money, you could probably operate it with very, very little in a bank account. Now that we got the foundation, now that you guys know the basics on this, let's talk about our first mistake on here. Mistake number one, the most common thing that I see my shop owners make as far as mistakes, as far as mismanaging their assets, mismanaging their cash, is draining their business of cash. So being self-employed is a little bit tricky. And where this kind of differs from a W-2 job is where some people get themselves into trouble and where it relates to this cash. So if you're working for someone else, right, you're getting a paycheck on it and you run out of money, you ran out of money, right? You got to go get credit cards, you got to go get loans, and you can mess up your personal finances pretty good, right? Don't get me wrong. If you're not self-employed, you could still mess up your personal finances. However, if you're self-employed, you can quickly mess up your personal and business finances, and you probably have a lot more access to borrowing money. So what I see a lot of times is, if someone is not self-employed, there's only so much that they can borrow. But if my clients are self-employed, they're confusing profits and wages from their business with access to capital from the business, right? Are you tapping lines of credit in the business? Did you get SBA or EIDL money in the business name and you took those out and you're living off of these? The number one issue that I see when I talk to my clients and they look at this and they say, "Hon, I don't have any cash," is generally not their net profit percentage. It's generally, hey, your net profit can always be better, but the lifestyle you're trying to live is a $500,000 lifestyle, and your business is only generating about half that in profit. A disconnect between what your business is currently generating and the lifestyle that you want to live. In the long run, my most successful, my wealthiest clients are the exact opposite. They're making $500,000 a year and they're living off of $250,000. And the difference is going to reserves, whether it's in a business, whether it's in their own retirement, whether it's in their own outside investments. And I can assure you, and we'll talk about this a little bit later, my clients that do that have a lot easier business to run. Generally, those are a lot more consistent, and ultimately, they probably have a little bit easier and less stressful life. Kind of going on the exact opposite of that, of why do I see the stress level high on my clients that don't have the reserves or are always fighting that cash position? Because you have to start making decisions based on your checkbook, not based on what's best for the business, right? And I see this time and time again. Cash flow is tight. People aren't saying yes to work, right? So you start discounting jobs and start getting work accepted so that the money starts flowing in, right? But what are you doing? You're selling work at a lower rate, so you have decreased sales, decreased gross profit. You're trying to get back cash, and at some point, you're almost shooting yourself in the foot. Now, just like we talked about before of, kind of robbing Peter to pay Paul, maybe you haven't ever done this, and you should consider yourself a lucky one, but a lot of people, especially when you're new in business, probably got bit by the sales tax, the first couple months, or maybe when things got tight. Remember, on sales tax, you're collecting the state or the county's money throughout the month, and then you got to pay a lump sum payment the following month. Too many people mismanage their cash, and when it comes to making that $4,000 or $5,000 sales tax payment the following month, you don't have it. Any of you guys have gone down that road, probably have made that mistake once and never again. They don't mess around with this stuff. You want a nice visit from the state or county, don't pay your sales tax for 2 months. All you guys are afraid of the IRS, right? The IRS will show up with guns, right? They have armed agents. We don't see it very much. This year alone, right, I'm probably 6 clients that have had armed agents come into their shop this year because of sales tax, right? So pay your sales tax, guys. They don't play around. Also, I've had 1 client in jail for sales tax this year too. If I haven't scared you enough on it, do not get your cash by the state or county sales tax. And then the last one on here, killing your cash on here or draining your business of cash, is getting into high interest rate debt, right? I get it. Times are tough, and we're going to do an episode in the coming weeks here about, I need cash. Where should I go? But one of the scariest things is getting into these 20, 30% interest rate loans with really quick repayment on it, because what I see is people barely able to make those payments, get through 3 months on it, pay off this debt. At the end of that 3 months, you're right back where you started, right? Because all of your profits went to interest instead of going to your reserves. Now, why does this stuff happen, right? Why does this stuff happen, and how can we stop this? So the overall idea here is you need to take control of your personal finances, right? If this mistake sounds most relevant to you. The hardest part is if I'm your client, I probably can't help you with this, and neither can your accountant. Because generally, if you're having this issue, you don't have a business financial issue, you have a personal financial issue. And what I recommend to people on this is you guys are very diligent about your business, right? You're listening to a podcast more or less talking about business finances. And a lot of times I see people's personal finances, the polar opposite of their business. Just like your business, right? You're looking to increase inflows and decrease outflows. Personally, it's the same idea, right? Do you need that? Do you need that subscription? Are you enjoying that? Are you making sure that you're not just spending all the money that you have today? Remember, you're self-employed, right? This paycheck is not as guaranteed as when you were working for the government and had a pension. Your family, your employees, everyone around you is kind of depending on you making sure that not only the business finances are okay, but so are your personal. Because these two are interrelated. If your personal finances start to suffer, it's only a matter of time before that trickles over to the business. How do we kind of solve this, right? So the overall idea on here is to change your mindset on distributions, to change your mindset on draws, and to kind of change your mindset on the business as a savings vehicle. So if you're not good with cash, a lot of you guys are pretty upfront about this, right? Hunt, I'm not good with money. Never been good with money. If I have it, I'll spend it. Then don't take it out. Right? Leave it in the business. If you're very diligent with the money that's in the business and you say, Hunt, if I take this out, I'm going to spend it, then try your darndest to not take that money out. I get it. Things happen. You're in the business of being self-employed to make profit. So I want you to take money out. I want you to enjoy the fruits of your labor. And hopefully there's plenty of this. But at the end of the day, you should be taking out the bare minimum that you need to get by. This is how I do it. This is how I recommend most of my clients to do this on a monthly, weekly basis. Take out what you want to live off of, right? Like we talked about before, if you're going to make $500,000, set a plan to be able to take out half of that. That's what you're going to live off of. Semi-annually, quarterly, or at least once a year, take a look at the balances and see what you have and see if there's more. All right, so I took out, what I needed for the year. I'm sitting here at the end of the year. I got $50,000 extra. Great, I'm going to take some money out. I'm going to go clean some stuff up, put it into a savings account. Whatever I need to do, right? I have options. Now, if I look at that and I say, hey, I was planning to take 50 grand out to do X, Y, and Z, but I only have 20 kind of available on here. Now you would look at that and say, well, hey, I don't have 50 to kind of invest. Now I have 20. I'm going to take 20 out. The difference between that and what some of you guys are doing right now to get yourself into trouble is once you realize that you've taken out too much money out of your business, you generally don't have that personally to inject back in there, right? So it's almost a one-way street. Whereas if you leave it in the business, and you're diligent with your business finances, it still is there, or whatever you have available is there, at the end of the 6 months, at the end of the year, and making sure that you don't overdraw out of the business. Another mistake on here, right? That's the biggest one, right? And I'll be honest with you guys. I'm looking at my notes right now, and I have about 4 pages, and 2.5 or 3 pages was all what we just talked about. Let's be real. Look in the mirror. You guys are probably your biggest enemy when it has to do with cash, right? Because if it's not you, if you're doing a good job on it, then the only other thing could be the business. If the business is making enough profit and your business doesn't have enough cash, you're the problem. If the business isn't making enough profit and it doesn't have any cash, then you need to fix the business, right? Kind of 2 different options here. I hope that you make this mistake because that means you probably did something right, but that is keeping too much cash in the business. Remember, the reason that you set your business up as an LLC, the reason that you made yourself incorporated, that you have the legal protection that you do, that legal protection limits the liability of you personally. It does not limit the liability of the business. So I'll give you an example. I've never seen this happen in real life. You hope that it doesn't happen to you, but still prepare for it. I have a shop, right? I have a client that slips and falls in a parking lot. They sue me into oblivion. I didn't pay my insurance, and so they're going to come after my business, right? This is a hypothetical situation. And they look at my bank account and they say, man, Hunt has $50,000. How much do you think that they're going to really lean on me to try to get $1 million out of me? They're going to try, right? These are insurance companies. They're going to sue me. But at the end of the day, when they look at this and say, hey, here are the assets that we can get. There's 50 grand in there and some used auto repair equipment. Take that same situation and imagine that I had $1 million in a savings account. You think that insurance company is going to settle for $500,000? Absolutely not. Once you get sued, that stuff more or less gets frozen. So if it's in there, it's too late. You can't strip that out of there now. Any sort of lawyer, creditor, insurance person sees that you have the cash available on there. Obviously, that's not going to work in your favor. It is not protected. Do I see a lot of clients that have this issue? No. If you want kind of a little fun fact, I won't tell you who this client is, but my record right now, I think he might have taken some of this out because we kept on yelling at him. He had $1.3 million, I believe, or so, spread between 3 or 4 checking accounts, right? No savings accounts, checking accounts. And because of the FDIC insurance limits, he had to split them up because even the banks were like, we don't want this much at a checking account. The guy has a lot of money, right? He has $1.3 million. And realistically, no one's going to sue him and take that money. But man, it pains me to look at this, right? Because he's not getting any interest at all, which leads us into our third mistake on here. The Federal Reserve cut interest rates last week, which is a good and bad thing, right? If you looked at this, interest rates went down, what you would be like, hey, everyone's happy about this, and the stock market plummeted. Why? If the economy is good, generally interest rates go up, right? They got to slow it down. If they're dropping interest rates, it probably means that they don't think the economy is super strong. Now, the good news is rates are down, but rates are still up. And up over my lifetime, up over your business career, they're a very good time for savings. My client that had his money in a checking account is technically losing money, right? Think about inflation. Inflation, 3, 4, 5%. And what do you get in a checking account? 0, right? So if I have $1 in a checking account today and it can buy me a soda, next year, that dollar is still going to be my checking account, but that soda is going to cost $1.05. I can no longer afford that soda, right? That is kind of the visualization of leaving money in a checking account. Now, if we had in a money market, CD, high interest savings account, something like that, in today's market, you can probably find somewhere still paying around 3.5% for pretty liquid stuff. So if you have reserves and you have money, if you have any money, right, there's no reason to not get some interest on this stuff. You know, a high interest savings account would get you 0.5 percentage points. Like I said, you should be able to find one that'll pretty consistently give you 3 percentage points on it. Might not be a lot. You probably don't have enough cash to live off of your interest, but think about that. You got $100,000 sitting in a bank account doing you nothing. It's going to make you $3,000 for just sitting there. Not a bad deal at all. And especially in today's day and age when there's no excuse on this, right? It's not like you got to go to a teller and tell them to transfer this. A couple clicks, get that out of your checking account, right? Get some money on this stuff, guys. So last one on here, I'm trying to set the stage on this because I think that this is a very important mistake because I think that some of you guys need to hear this right now because we're going into a new year. The last mistake we're going to talk about is paying debt down too quickly. Right? And I'm going to set the stage on what this would look like if I'm afraid it's going to happen to you next year. Because if it's already happened to you this year, you know you've made this mistake and it might sound familiar. But what ends up happening a lot, especially you come off a bad year, maybe you come off a bad 2 years, 3 years, maybe COVID was not kind to you and you're finally starting to see the light. You've had to go through the high interest, you've drained the bank accounts, you've borrowed money, and right now you're sitting here with a bunch of debt. The good news is business is booming, right? Profit has looked good. 2025 is shaping up to be an awesome year, and you're on a mission to get out of debt, right? You don't like having debt. You don't want to see the debt on there. So every cent that you make, you're going to chuck at that debt. This is the number one mistake that I see of people trying to, have this comeback tour and have it come too quickly. It took you 3 or 4 years to get into this debt. Do not try to get out of this debt in 3 or 4 months. If it works, great. If it doesn't, you're going to be right where you started, right? Because this is what ends up happening. You get on there, you make $100,000 of profit the first 6 months of next year, business starts to slow down, unexpected expense comes up, and you're broke. Why? Because you were good. You were smart, right? You took every single profit, like you said, and you chucked it all at your debt. You chucked it all at your loans. You paid back that family member, but you don't have any reserves. So what happens when that unexpected comes up? What happens when you have that slowdown in business? You got to go back and borrow. You got to go back to, the credit card advance. You got to start running those credit cards back up on this. When you are trying to get out of a debt hole, this is how it goes. You have no cash, you borrow debt. So if you want to pay down debt, you do not go immediately say, great, I got profit, I'm going to pay down debt. What got us into this problem in the first place was not the lack of profit, it was lack of reserves. So if you want to fix the underlying issue, you need to, because if you don't, it's just going to come right back around. You're going to be in the same issue again. So what would I much rather seen on that? I made $100,000 of profit the first 6 months of the year. I got $100,000 in a savings account. I would take $100,000 a savings account giving me 4% interest and still have $300,000 of debt sitting on the books. right? Worst case scenario, things get tough. I can pay my debt with my savings account. Also, I can look at this and say, hey, this has only been 6 months. I had a bad 4 years. I had a bad almost 48 months on this stuff, right? I need to make sure that we're really on the rebound, that we're really healthy here before I start trying to attack this debt. If you rack up this debt in 4 years, how do you expect to pay it down in 4 months, even a year, right? Even 2 years while still maintaining your reserves. If you racked up that debt over 4 years, your plan should be rack down that debt over the next 4. Do not get yourself in a cash crunch just to pay down debt. Dave Ramsey's not always right. My clients that have a stress business versus a stress-free business generally has nothing to do with how much profit they're making. However, it generally has everything to do with how much money they have in a bank account. Cash keeps the light on. Reserves allow you to make smart business decisions and not decisions based on cash flow crisis. I hope this was helpful. I hope that this was informative, and I hope that you share this with friends, other shop owners, anyone that you would find this information informative. As always, please shoot me an email if you have any questions or comments. So thanks again for joining me on Business by the Numbers. Stay safe out there, and I'll talk to you all next week.